What's up, everybody? Welcome back to Crypto for You. Bitcoin has just dumped 8%. We just had a flash crash for Bitcoin, and not just that, but Ethereum and other altcoins have just been obliterated. We've seen Ethereum fall 11% and other altcoins falling even more. The question becomes, is this the end of the altcoin season? Are we about to see a massive correction, or will we see a quick reversal and a continuation to the upside? That's exactly what I want to talk about in this video, and so strap in. Don't forget to leave a like down below and subscribe, and let's get straight into this video. Starting off with breaking news, we've just seen Senator Elizabeth Warren releasing the Digital Asset Anti-Money Laundering Act of 2023, and this bill, summarized in one simple paragraph, is basically a bill emphasized by Senator Elizabeth Warren to seek to compel FinCEN, the Financial Crimes Enforcement Network, to issue guidance on crypto. Now, let's look at this in more detail. The first thing that this whole entire bill does is it extends the Bank Secrecy Act responsibilities, which includes the KYC, to digital asset wallet providers, miners, and validators. Basically, what this means is now crypto exchanges, wallet providers, miners, and validators are required to adhere to KYC norms like traditional banks. Now, KYC will be the norm everywhere. The next thing this act talks about is addressing a major gap with respect to unhosted digital wallets, which basically means that companies like Ledger, companies like MetaMask, that allow you to hold your own crypto using the means of the 24-word passkey, that don't keep your private keys on their exchange, are now going to require to have more verification to report requirements for transactions involving these wallets, especially for large amounts or those that are linked to high risk jurisdictions. So basically, these unhosted digital wallets will now require more monitoring. Next, we have this law right over here, which basically enforces agencies like the Treasury Department to establish new processes to regularly examine and review basically crypto exchanges and to make sure that they follow the rules for crypto. And the SEC will now be able to create similar review processes for asset businesses that they oversee. But that's not all, because this paragraph right over here explains that US citizens are now required to submit a report to the government if they send a transaction of over $10,000 from an offshore account, which basically means if you send $10,000 or more from an exchange that does not follow US law, does not have KYC enabled, you will need to submit a report to the government to have this funds transferred. And it's interesting how this is going to happen, but whatever this means is this bill is basically created to crunch down on unregistered exchanges, to crunch down on these unhosted digital wallets. Basically, the government is trying to control crypto in its entirety, and the cryptocurrency world does not like this, because we have just seen a 9% crash in mere minutes. The crypto world is reacting severely to this news, to this bill that they have just proposed. But is this dump something to be scared about? No, this dump is actually very normal in a bull market. Look at the weekly time frame. We have had 7 green candles in a row, and we are severely overdue for a small pullback like we always do in crypto. Just look at history. If we go to the past, we have seen these candles that are literally just 1 week candles. They just last 1 week, but they're just small periods where we fall down around 16% before coming straight back up in 1 week. And then we had another one right over here. This was a 10% correction that just lasted 1 week before we came straight back up and continued our trajectory. We had 7 candles and a crash of around 20%, and another pump and another crash. Right over here at the top, we actually had a bigger crash of around 30%, which lasted actually a month. But bull markets are not just straight vertical ascents. We have periods of decline, and the question is, how much are we going to decline? And I can answer that too, because going back on the daily time frame, I can show you that we have an amazing pattern right over here, an ascending channel. And after tapping the top, what happens is we always fall down to the bottom, which is at around 38,900 to 39,500. That is the big support level that we could fall down to. But it's not just because of this indicator. If we go on the Bitcoin futures chart, we have a gap that goes down to $39,200. So if we fall anywhere, it's down to there. That is the price target that we could fall down to. And of course, that's just a bearish perspective because what we could do is just turn around and straight continue pumping and make new yearly highs. We did already fall 10% from the previous high, and we could just straight up turn around and continue to rise up. And so the real question becomes, what are we going to do in the next couple of days? And I can tell you that exactly. I have two predictions. First of all, the bullish prediction. Right now, Bitcoin is testing this green line, but not just the green line. We are testing beneath the $42,000 level. If we break above this $42,000 level, we could see a rise up first to $45,000. And if we break $45,000 and make another high, we can see easily prices soar to $50,000 and maybe even higher because there's a lot of bullish real world news coming out. Like, for example, the 11 spot Bitcoin ETFs that really want to get accepted, including BlackRock's ETF, the halving that's about to come up, and the government having almost 100% chance to cut its funding rate. Not just that, but the Ethereum spot Bitcoin ETF and so many other crypto news that I just can't talk about in this video. And it severely outweighs the bearish news that we just saw. And the only reason Bitcoin's crashing right now is because we have pumped recently in the market. We have been doing so well. And so, if we get rejected at $42,000, where do I think we could go? Well, first, I said 38,900, somewhere around there. But the question is, if we break this, where do we go? If we break this level, if we break out of this pattern, which by the way, ascending broadening wedges are in fact bearish. If we break that, we could potentially fall all the way to $30,000. Now, hear me out. That does sound crazy, but if we go on the weekly time frame once again and we look at this past year, we can see that Bitcoin has been inside of this ascending channel. And this ascending channel causes Bitcoin to pump inside of these two boundaries. Once it reaches the top, it always falls down to the bottom. And the bottom is at around $30,000. And 30,000 is a massive support level that Bitcoin respects a ton. And so if we ever break below 38,900, 30,000 is a safe place for Bitcoin to fall down to. And if it does fall down to $30,000, we can safely tap the bottom of this channel and once again resume our 7 weeks of price action to the upside, which could potentially take Bitcoin all the way up to $52,000. This is exactly what I think will happen to Bitcoin. One of these two outcomes, and the question becomes, what are we going to do in the short term? So I will be continuously monitoring Bitcoin's price action and will update you guys accordingly. And so with that being said, hope you guys enjoyed this video. If you did, leave a like down below, subscribe if you haven't already, and don't forget to click that post notification bell so you never miss another video. I'll see you in the next video. Bye!